Hi traders, I wanted to show you four examples of four binary options trades that I've just taken. I have taken screenshots of when I was actually taking the trades, and I've put it up on, where is it, on the blog, so connectwithshiva.com. I'll just quickly show you. I've put in a little bit of information in regards to when I took them, Australian Eastern Standard Time. So it was, what's the time now? It's 1:15. I took three of these at 11:45 a.m. and the last one at 12 p.m. Australian Eastern Standard Time, which is GMT plus 10. Okay, the screenshots are here. I've put arrows on, which would be the last candle anyway, of where I took my entry. This is the double top fourth wave trade that I speak about, and it's the second candle. Now, which candle you enter on can vary sometimes depending on if the market is just going to consolidate, and after all of these the consolidation did happen. I've also put in the links down the bottom here so you can download those screenshots and have a study of them. So let's go back onto MT4 and let me run you through some of the analysis. Now, someone asked me a question in regards to how many currency pairs do I watch. I tend to only like watching about 6 of them, and primary reason is so that I can tile them comfortably like this, and that way I don't miss any trades. Okay, so the pairs, Euro USD, Euro JPY, Pound USD, Pound JPY, AUD USD, and AUD JPY. How this works for me is I apply some degree of correlation to this as well. So Euro JPY, Pound JPY, and AUD JPY generally correlate with each other positively. Euro USD, AUD USD, and Pound USD tend to do the same thing. So if one currency pair is behaving in a certain way, chances are another one that positively correlates with it would possibly do the same thing. Okay, so let's have a look at this. This is what's actually happened. Let's start off with the JPY pairs. Okay, so Euro JPY here, Pound JPY here, and AUD JPY here. So actually, let's move these two around so it's easier for you guys to focus on. Okay, so here's what I saw. Initially, market opens here, so what you can do is take your horizontal lines for all of the currency pairs and draw in where the market opens. Okay, now here's what I saw. Market opened, went up, it opened below here, so it's well and truly below the close of Friday. Market started going up, massive green candle. At this stage, I still have no idea of what's going on in the market, right? Market pulls back, so this was the low. Market goes up, creates a new high up here, okay? Creates a new low up here, and then this little green candle's pushing up. Now, this you could try and consider to be high. It's actually not, because this whole entire structure actually right now is still a part of this. So this is the outside bar. This whole thing fits within this structure. There is actually no clear highs or lows. When the market then pushes back down again, up to this point here, this is now my new higher low, right? The other thing you can start thinking of in terms of price action is where these two candles here produce nice wicks to the high. So that gives me to some degree a belief that this market is going to pull back down again, okay, to some degree, because keep in mind the market can actually do almost anything at any point in time. What we're doing with technical analysis and then applying some degree of fundamentals to this is to try and predict where the market's going to go in a very short period of time. Forex, again, I've said this before, is much easier because you know a direction the market's going to move in once you've done your analysis. Binary restricts you because you don't know when the move's going to happen and for how long. Okay, whereas with Forex, it won't matter to me if I take an entry somewhere here and the market pushes back up briefly, because I know eventually this market's going to come back down, having done my analysis. But with binary, if I say, hey, you know what, I'm going to take this market just produced this, I'm going to take a 15-minute entry going south doing a put, market does this. Straight after that, in the next 30 minutes, boom, that's a massive fall. So that's where binary restricts us, right? So what we're doing with our binary trades is looking for something that's a sure shot, okay? So, and that's the only way. There's a lot of people out there that do trade, 2 minute, 5 minute expiries. Yes, you can do all of that if you're constantly just trading low amounts, $5, $10 trade amounts. But if you're going to do, and at some point your goal is to live off all of this, you eventually would like to get to a point where you're putting, 250 or $500 or $1,000 down on that trade. So in order to do that, you want to take your entries on something that is a sure shot. Unless, of course, you're a reasonable trader and you put 10 grand down into your account and then play around with it. But if you're going to start off with 250, 500 or so, you're going to have some problems with building that up because the sure shots won't be guaranteed. Now, let's get back to this. So here's what's happened. When the market pushed back down again and created a new higher low, market started pushing back up again, started creating all these wicks. What I knew at that point was that this is now a potential of an M formation happening. Okay, when or how quickly this was going to get to this point here, we don't know. Okay, so at some point here, you could have taken it. I did some demos on here as well because I was just sitting in front of my desktop. I took a few demos on this going up within for the next hour. So this completed off. And again, those demos for me this was still where I was predicting where the market may go. That's why I demoed them. But my live trades only came after, so Euro JPY, when the market pushed back up, created this wick. And now I'll grab my crosshairs and I'll show you. This is very close now to this previous high. Now, because this is smack bang still in the middle of the Asian session, that's when I started thinking to say, okay, this may bounce back slightly. And yes, someone did ask me, I think it was Phoenix, he's asking me good questions. He asked me about these, the trend channels. Yes, when I use these, if say for instance there's a move in a direction where I believe it's going to be a false move, and the trend channel, so I'll expand this Euro JPY pair for you, it's going to show you. I don't know if you guys can see this clearly. See here, you can see this green line here. This is the middle part of that trend channel line. So once that's going through and this breaks past it, pulls back, to me there's a reasonable chance that this is going to pull back down again. So I took my trade on this candle here. Okay. Now with Euro JPY, usually what I do tend to do, if I drop a line on this, this was the candle that started at the 45 mark. So this was 11:45 for me a.m. Sometimes I'm a little bit wary about those pullbacks around the 45 mark. I tend to like it if it finishes off at the 30-minute mark or finishes off at the end of the hour. The reason why I decided to take it on this one was simply because I did not want to go into lunch period. I kind of consider lunch to be anywhere from about 12 to about close to 2. At any point in time, you're going to see a slowdown in the market. So I took it only for 15 minutes. That's also the reason why I didn't take it for a longer period, because I was pretty sure smack bang in the middle of the Asian session, there's going to be consolidation that kicks in. Okay, so let's tile this again. And for those of you that are unaware, see this little button, the tile button next to the magnifying glasses. If you click on that, whatever currency pairs you've got open down below here are going to tile for you, so you can watch them all at the same time, and that way you're not going to miss any trades if they happen. For me, the other thing it does is it helps with correlation. So if I see Euro JPY doing one thing, I'm pretty sure that Pound JPY and AUD JPY may be doing something similar. Okay, so again, this is what happened. This was the fourth wave. Now, I knew that this is going to possibly consolidate because, again, it's too early for the moves to happen. The other thing you're probably looking at is this is possibly creating like a triangular flag pattern. What we're waiting for is when the market eventually, now it's only 1:30 right now, so in the next 3 or 4 hours, 4 hours I'd say, is where the market is going to break through and give us a clear indication of where it's going to go for the rest of the day, not just sessions, but for the rest of the day. So chances are this will break the initial high of the Asian session and start moving up. But here, we're looking to see that this was the high, this is now the lower high. The market in the last 2 hours hasn't broken past this point. It has created a higher low than these points here, but it hasn't broken past this point or this point. So we really have no idea where this is going to go. This was the initial M formation. This is not the full M formation that's going to say this market is just going to continue off blindly in one direction. This was the initial M formation. So I took the trade off there. And on pound JPY, I took the trade here. This wick broke above the high, the previous initial high that the market created. So this was first wave, second wave, third wave. Also, the other thing that I like to look for is how many candles preceded this. These were 3 candles. This, again, 3 candles here. Notice that. This, 2 candles. We'll come back to Euro USD, actually. That was the last trade I did. And here, again, this is 2 candles. This would be the third one. I actually took the trade on this one, I believe. Let me just check where's the website? AUDJPY, yep. So the trade was off this one. Yep. So the trade is off the second candle here. This one here. Okay. So and it was just for the 15 minutes. So this was the first wave up. This was the wave down. These two I consider to be the reasonable waves up. See this pin bar developed for me? That's what gave me an indication that chances are this is going to head back down again. Now, I waited for this to do the pin bar thing. I waited for this to complete, and then I jumped into this trade. Okay. Yes, this could have gone back up again, but chances are what the thinking was in my head was that, one, the correlation between these two would also possibly result in a similar sort of setup in this one. So this is where you can utilize correlation between different currency pairs. And at the same time, that if there was an M pattern formation happening, chances are that this will follow through on it. Now, the reason why I did not take a put trade here, one, because of the wicks, the size of this candle kind of scared me off a little bit. The other thing was that the price here came nowhere near this high point here. This doji for me was a dead giveaway. This was also too early in the Asian session for me to consider that this was going to be a pullback, but chances are now we're going to enter into consolidation for a while for the next few hours. This might move up, move down for a brief period. What I may suspect is if the market is, and it's exactly what I was about to say that's going on here, if the market is planning on creating an M formation for the start of the week, and let's say, for instance, their goals for the market players are that they're going to push the market down for the next few days, then chances are these guys are going to go up, hit, and keep hitting these points, and then pull back down probably at the start of the London session, possibly even do this earlier than the London session. So what we do now is, once we've done those trades, so we sit back, we constantly check to see what's going on the hourly chart or the 30-minute chart. I personally prefer the hourly chart. See, on a 30-minute chart, notice how they've hit this point on the Euro JPY, they've come back, hit it again, and now it's going for a third hit. If this now breaks past these 2 points, okay, and this is my 50 EMA, by the way, so if it breaks past these 2 points and keeps going in this way, that's now just created a new high or a higher high. And now what my thinking would be, well, this is going to be a trend that's going up. Okay, so if it's doing it here, chances are it's going to be doing it here and here as well, right? So look at this on a 15-minute chart. It's going back to this point. Let me jump onto the 30-minute chart. It's doing exactly the same thing. Let's have a look on the 1-hour chart. Chances are this may push up and then come back down. We don't know yet. So what we're looking for is clear examples from, or clear signals, mind you, from the market to say this is exactly what we're about to do. Okay, same thing here. This is just clear consolidation in the 30-minute charts that's happening in during the Asian session. So early on, we were able to execute a couple of trades and win them. Now we sit back and we wait for better setups. Okay, I hope that helps. Certainly jump onto the website on the blog, download these, analyze them, see what you see. Okay, let's before I close off this video, let's have a look at the Euro USD pair as well. Now, for me, this was just a clear an M pattern during the Asian session. This is not the overall M patterns that we, or the double tops that we will tend to follow during Forex. But in this case, to me, it was just too good to miss out on. Both currency pairs, sorry, both currencies of the pair, the Euro USD market, they're both closed. So this was easier for me. There's not going to be massive movements happen. I took the entry on this candle, and there's a screenshot in the blog as well. So it was clear for me. This was a bit of a stop hunt high, and then took an entry on this right on the pullback. See that? So you got to start to consider also how the currency pairs may behave dependent on whether the correlated markets are open or closed. So if, say for instance, in this case where the London market and New York markets are both closed, well, you'd probably be reasonably safe in saying that you could take entries on this and know that there's a reversal coming. But say, for instance, you've got the London market open and the US market still closed, well, you might be a little bit wary because you check to see if there's going to be news and whether the market makers will use that news to create its structures, okay? Or you look to see if that's going to trigger off a trend or something along those lines. So say for instance, if there's, say in this case here, Euro USD, we've got a range of 29, right? What that generally means is from bottom to top, we've got roughly about a 29 pip movement. If we're expecting that the Euro USD pair to have 60, 70 pip movements throughout a 24-hour period from the high or the low of the day, then chances are that we're now expecting a move to happen during London session, right? Now, if the euro's open, then we know that there's billions of dollars of euros being traded and not necessarily the US dollar. So you can utilize that information now to enter into trades knowing what sort of volumes might be at play there. Okay, so there might be strength for the euro dollar happening, whereas the United States, they're still asleep to answer back. So that may be enough to either push Euro USD up or push it down. You've got to make the decision. And this is where fundamentals that does come into it, and that is also key. Okay, so here right now we've got the possibility of triple tops happening. Okay, see how we're in the first minute and a half of the 30-minute candle, and there's some struggle to get past that point. Same thing happening here, same thing happening here. This one, in fact, okay, that's a 1 hour chart. Let's jump on to 30 minutes. Actually, they're all struggling. So that, utilize the correlation in that regard, and that's going to get you to some degree, some understanding behind when you should be taking your entries. Okay, so check out all the screenshots, download them, study them. Certainly ask me any questions in the comment section of this video and on the blog if you have in regards to that. Now, just quickly also with Pound USD and AUD USD, see this pattern formation? If we've got no idea what's going on, right? So market opens here, it pushes up here, we get a nice wick here, and we might say, hey, should you get the wick there? Would you consider taking a short? No, at this stage not, because I've got no idea what the hell's going on with that. Market pushes up. See, there's no clear pattern. We don't know what's going on here. There's wicks to the low, wicks to the high here as well. Market here creates its initial high here. So what we do, we jump onto a higher time frame. Can I see something happening there? Probably not. Okay, we jump onto the 1 hour time frame. Right? This is coming back down. Now, what we're going to do is possibly draw our lines in on the 1 hour chart and the 4 hour chart, and then we come back in roughly 2 hours or so, 2 or 3 hours, and then we sit and watch and we analyze and we see if the market's giving us any signals in regards to where it's about to head to. If we start seeing certain points where it's broken the low, broken the high of the day, we'll start measuring. It could actually be a false move before the market moves in its proper direction. Well, hey, if you, for those of you that are trading forex, if you're in it for about 10 for 15 pips or so, you can still be in it and out, run the false move, and still make money off of it. Okay, so look at it that way. Alright, guys, I don't want to make the videos too long, so I'm going to try and speak less. Alright, all the best.